ETH. I mean, holy shit, you never get an opportunity like this. I'm like, this is better than Bitcoin was in March 2020. This is a monster. We're going through the fastest period of change of all human history.
Do you think that at this point, every institution effectively is looking at Bitcoin or is forced to have that conversation in the boardroom? Or do you think that there are still some where it hasn't really reached their shores?
I spend probably 20% of my entire week, every week, both talking to institutions, presenting to institutions, answering requests. They're all over this. Everybody is. I think the space the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion.
Welcome to Crypto Revolution. In this video, we share an interview done by Scott Melker with Raoul Pal, and they navigate through a fruitful discussion about Bitcoin, Ethereum, and other altcoins. They discuss his prediction of the rise of the market cap of Bitcoin and crypto, and he predicts it will go up 100x. So imagine this, from $2 trillion to $200 trillion. They also discuss regulations that might be put into place and what altcoins you need to get your hands on, aside from Bitcoin, to help you yield returns in the future. He also shares the interest shown by institutions in crypto. Stick around till the end of the video and watch the rest of the interview to know Raoul Pal's detailed breakdown of what he sees himself investing in and what he thinks you need to keep your eyes on when it comes to cryptocurrencies.
I looked at, okay, on-chain, what's going on? Well, there was a huge amount that had been taken off exchange, an enormous amount that had been staked for ETH 2.0. There's a massive amount that was also in DeFi locked away, and that left 13% of the entire supply available on exchange. So the supply is falling every day. It's probably about 11% now, and yet demand was exponential. So if you've got exponential demand and limited supply, you're going to get an exponential rise in price. I looked at this and said, not until ETH 2.0 comes out is this going to change, because everybody's going to stake, because there's no point not staking until that moment, right? Because the ETH price is going to rise. So everyone's incentivized to stake or to take it off exchange, and there's no supply, and it's going to keep falling. And they're burning ETH. I mean, holy shit, you never get an opportunity like this. I'm like, this is better than Bitcoin was in March 2020. This is a monster. With incredible attractive yields. No wonder the gas fees are high, right? Because it's incredibly in demand. Does that push people out into Solana and other things? Of course, and that's great, because it's a multi-chain world out there. So people who need cheap, fast transactions will move to different chains. People who want the benefits of Ethereum will remain on Ethereum. And there's a huge investor base that will remain on Ethereum for the reasons we've talked about. We're going through the fastest period of change of all human history. And it's hard for people. And they want to know what they know. And they can't deal with all of this change happening. So, you need to think of the marginal returns of negative and positive stories. So what we've got is the marginal return of a negative story was 0. The price didn't go down.
Right.
So then what is the marginal price action for Microsoft or somebody owning Bitcoin? Marginally positive. Now, it'll probably be okay, but I think we all expect that now. It's kind of in the price that every day there'll be a new, but the Bitcoin ETF isn't, because it's going to bring every RIA into the market, buying for everybody. I don't think that's in the price in any way, shape or form. So that's the biggest positive out there. There's not regulation, because we all kind of expect regulation to move forwards, but in a slow, lumpy way. We understand people are putting it on their balance sheets. Sovereign wealth fund, okay, that, even though I know several of them own it, yeah. But if somebody comes out and makes a meaningful stake, or a governmental level, like, they're all over this. Everybody is. Everybody, if you talk to anybody from Galaxy to Luca to any of these companies that see the onboarding, NIDIG, all they're seeing is wall-to-wall requests, incoming, onboarding. It takes a while. People don't understand that, for institutions to go, oh, well, we're going to buy Bitcoin. Okay, how do you mark to market it? What is the open? What is the close? Which price do you take? There's no single exchange. Then how do you custody it? How do you account for it? All of this stuff takes months of work. Well, you can trade a cycle, and that's okay. That doesn't mean you've cheated on your girlfriend. You can trade a cycle. If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stablecoins, because when Bitcoin outperforms, it's generally when the markets are falling, and in which case you shouldn't own Bitcoin. You should just own stablecoins. And when the markets are in a bull run, generally the alts outperform, particularly the large alts, so like Ethereum, and therefore at that point you should own those, and maybe you should never own Bitcoin. Now, that's the extremity of the whole thing. So my view on this is, I think the space the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion. I mean, that's ludicrous. We've never been faced with an asset class that does that in all recorded history in a period of time like this. So the cycles are going to be important occasionally, because you don't really want to sit for 2 years not making money. You might be able to make money in other stuff. But, generally speaking, you want to keep some into it. And, some people will keep all into it. I won't. I will take some off the table and do other stuff. And I will then look for the time to get back in again when I think it's going on its next move. Now, maybe we've eliminated the cycles altogether now, and that it's smoother and it trades sideways for 2 years. That's possible too. I don't really have a view, but I won't be 100% my net worth the entire cycle. that doesn't make 100% sense to me.
Yeah, but would you be 20?
Oh yeah. And knowing that 20 could go down to 8 because of the market's I have no issue with that whatsoever. So last year we had the biggest recession in all recorded history, and it only lasted 2 months because we threw more money at it than any other thing in that 2 months than had ever happened before, by a factor of God knows what, 10. So Jay Powell and Janet Yellen sit back in a room and go, "We did pretty well there," and they kind of did. They kind of did for the economy.
Yeah, they did.
And for people who owned assets, it's like, okay, the world didn't fall apart, and we stopped a recession. So why are they not going to do that again at any opportunity? I mean, they now go, well, Christ, we avoided the financial crisis, and then we avoided the biggest insolvency in history over the pandemic. Well, let's keep using this magic tool because it's the gift that keeps on giving. They're not going to say, well, we're not going to take it out of the box until it's a really special moment. They'll be like, fuck it, the S&P's down 10%. I'm opening the box.
Yeah, unload the big guns.
Yeah, right. That is the game changer here. And so it gives people a chance to not get left behind. Staking is the big change. Staking is huge. It's risk-free. If you're going to keep your ETH, then staking for a yield is a risk-free reward. And somebody wrote about this on Twitter today about, well, is ETH the new government bond? It's kind of interesting.
And the second level effect that I love of staking is you don't panic sell. It's locked away. You're protected from yourself. I think that's the same case with multi-sig for Bitcoin. If it's going to take you a week to get it to the exchange and sell it, then you're going to be way too late to have panic sold when you wanted to anyways.
And, all of us are used to having these money market locked funds, these time funds. So, you get a bit of spare cash to get the extra yield when there were interest rates. You'd lock it away for 6 months and you'd have this 6-month thing and you couldn't use the money. And if you did, you paid a penalty. Well, this so happens that it's better yield and it's equivalent safe because it can't default on you. Ethereum can't default, nor can Bitcoin. That's a game changer. Different exchanges can, different DeFi protocols can, but staking can't.
I was just going to ask you then, how do you view staking versus one of the central, I guess people call them CeFi, the BlockFis and the Celsius and Nexos and Voyagers of the world? Do you think that there's more risk in parking your assets there and gaining your yield from them than there is in staking it directly in the contract?
Yes, and you should be compensated with high yields for it. So, it's the same as the bond market. In the end, money is efficient, And what it will do is it will sniff out where high yields are. Sometimes it's due to demand, in which case more capital goes in and it goes down, or it's to do with risk. Junk bonds have a higher yield than AAA corporates. Right. It's normal.
Raoul Pal never falls short of inspiring and reminding individuals of how big an opportunity cryptocurrency is. As you heard in the featured clips, he shares that the market cap of crypto will go to 100x, which means $200 trillion for its market cap. And we've never been faced with an asset class that has done this in all of recorded history. What do you think about what he had to say about his predictions for Bitcoin's and altcoins' future? Do you agree with him when he says it is better to own altcoins, though, rather than Bitcoin? Let us know what you think in the comments below. That is it for today's video. If you enjoyed watching this, do give it a like and subscribe to the channel for more cryptocurrency news. Till the next video, this is Crypto Revolution.